Good morning to you all. I am Karen, CEO of FHRD. We have teamed up with APS Bank, WH Partners, and Infrastructure Motor for this webinar. This session will give you insights on the upcoming workplace auto-enrolment legislation, which all public and private sector employees need to have in place. So it is a very important discussion which we need to have. I will hand over, we have a pegged an hour and a half, so I will hand over to Mr. Darren Ajus from APS Bank, who will take it over from here. Thank you.
Thank you, Karen. Thank you,
Thanks.
Karen, and thank you everyone in the session for attending this online workshop. We have a 90-minute session where to start off with I will be walking through the proposed pensions auto-enrollment legislation. After my presentation, we're going to have Dr. James Cicluna from WH Partners and Marib Sajla from Infrastructure Malta, who will be talking about the scheme they set up for their respective entities. So starting with my presentation, so as Karen said, today we'll be talking about the auto-enrollment consultation paper. Basically, today I will not be talking about the APS schemes, okay? However, the discussion will be based upon our personal experience on both the APS occupational pension scheme and the personal pension plan, which we launched in 2020. So basically, this famous consultation paper was issued in June 2025, which was following the budget announcement in October 2024, where the finance minister had said that in 2025 a legislation will be coming out with regards to auto-enrollment for workplace pensions. In a couple of weeks ago, there was the 2026 budget where the finance minister again confirmed that the final details for the legislation are being ironed out. So this is coming, and this is why it is important that companies and entities are prepared for this upcoming legislation. So basically, just to give you a bit of context and background, Malta's pension system relies heavily on the first pillar, on the state pension. But demographic and sustainability pressures are growing. Basically, as we all know, people are living much longer, and birth rates have fallen significantly. All right, what does this mean? Some statistics from the consultation paper. So my presentation is going to be from what there was written in the consultation paper, which was issued by the Ministry of Finance. So basically, a couple of statistics: the public pension replacement rate is projected to drop from 39% in 2022 to around 32% by 2070. So basically, this is the percentage of a worker's pre-retirement income that the government pension will provide in retirement. Okay.
The same guy I spoke to.
Okay.
A couple of times.
Another alarming statistic is that the old age dependency ratio is expected to rise from 27% to 65%. And this means that the number of people aged 65 and over, okay, when compared to people who are in working age, is going to increase from 27%. It's projected to increase to 65% by 2070. So if this actually happens, 65% of people above around 18 years of age would be pensioners. Now, The other issue is that even though in Malta the framework of private pensions was introduced in 2014, the uptake on the second and third pillar pensions, which are the private pensions, is very low. Okay. Another statistic from the consultation paper states that only 4,667 employees were enrolled in an occupational pension scheme, uh, which is only 2% of the working population. Okay, this is despite the tax incentives which were introduced in 2015. Participation remains low. So the idea here is that the government wants to introduce some form of mandatory system. Now, the consultation paper responds to Malta's commitments under EU's pension adequacy goals. Social partners are increasing calls for mandatory saving mechanisms such as auto-enrollment. And in Malta, we are one of the very few developed economies where we do not have a mandatory and a robust private pension system. Okay? International experience demonstrates that auto-enrollment significantly increases pension participation rates by overcoming behavioral barriers such as inertia and procrastination that prevent voluntary enrollment. All right. Research from what happened in other countries also shows that auto-enrollment significantly increases participation rate. Just a small note about what I mentioned before. The consultation paper was launched on the 18th June of 2025, and it was concluded in the first week of August. Now, what are the key features of this proposal? Okay. So the main objective here is to automatically enroll eligible employees into an employer facilitated occupational pension scheme, unless the employee actively opts out. So this is a kind of a shift from an opt-in to an opt-out system in order to boost participation. So basically, what does this entail? This entails that eligible employees will be automatically enrolled, okay, into the scheme, but they will obviously have the option to opt out. Now, as a legal framework, the auto-enrollment scheme is to operate exclusively under the Retirement Pensions Act. Okay, in Malta we have two legal frameworks, which are the Retirement Pensions Act and the Insurance Business Act. The auto-enrollment legislation per se, providers need to be under the Retirement Pensions Act. Okay. Now, auto-enrollment products must be defined contribution in nature, trust-based, and licensed and regulated by the MFSA. Now, this is where the details will get interesting for the audience. So, who will be enrolled? So, all employees must be enrolled if they are aged between 18 and retirement age minus 10 years. So that means 55 years of age. So anyone between 18 and 55 will be automatically enrolled, okay? They would need to be tax residents in Malta or habitually working in Malta and have the employment as their main source of income. They must not be on probation. And if they are third country nationals, they would have needed to work for at least 6 months with that company and hold the valid permits. Now, in order obviously not to discriminate, in reality, even workers outside the bracket of 18 to 55 can participate, but they would need to opt in, all right? So they will not be automatically enrolled, but they can opt in, all right? As I said before, the slide is about third country nationals. Basically, they would be eligible to join after 6 months or end of probation, which is later, okay, from the term, provided they have the valid permits. Self-employed may join voluntarily but are not automatically enrolled, okay, so they can opt in, anyone who's self-employed. Now, every employee would be automatically enrolled with €50 per month, as you will see in the next slide. But they can either opt out or they can increase the monthly contribution. Okay, so when it comes to opting out, employees may opt out within a defined window of post-enrollment, which in the consultation paper stated as 1 month. They may change their mind, but they have only 60 days after opting out. So if an employee opts out and they change their mind, they can be re-enrolled after 60 days. Now, however, re-enrollment occurs automatically every year when opted out. Okay, so let's say an employee has opted out. A year later, they will be automatically re-enrolled with the same terms, all right? And opt-out and re-enrollment is limited to once annually. No. The minimum employee contributions are €50 per month from their payroll, from their salary. What is very interesting, as most of you probably know by now, that in last year's budget, the finance minister had said that in order to set an example, the government will be matching up to €100 per month for all public sector employees. Okay, whereas for the private sector, it will not be mandatory for companies, for employers to contribute themselves, okay? However, obviously, voluntary contributions are being encouraged and attract very attractive fiscal incentives. Now, with regards to portability and flexibility, it is very clear, both in the consultation paper and even in the current legislation, where employees can carry their pension savings across different jobs and providers, okay? MFS says to implement a central transfer protocol to support smooth transitions. The auto-enrollment occupational retirement scheme should also allow employees to have a contribution break at any time, at any point in time in certain circumstances, such as career breaks, unpaid leave, etc. Okay? Now, there is also an element of consumer protection and scheme governance, where the safeguards for members are that there is a proposed, it is being proposed that capping on fees and charges to be introduced. This is to be defined in a secondary legislation, all right? So there was nothing further on this on the consultation paper. What is also interesting is that there is a default investment strategy for non-engaged members, for members who maybe are not familiar, who are not maybe financially, are not financially literate enough. There is a default investment strategy, which is basically a life cycle fund, which would place them in a strategy according to their age, basically. Employers must provide scheme details and opt-out procedures within 4 weeks of eligibility before actual enrollment, okay? Now, providers are also required to provide online access, including statements, visibility of any costs and charges deducted. So basically here, the consultation paper is making sure that employees, the members, okay, of these schemes are protected from any angle. The investments, charges, and visibility of the scheme. Now, the next slide is about enforcement. This is a very serious matter on a national level because in Malta we are very late in the day when it comes to this pension hole, this pension problem. So the government is taking it very seriously, and in the consultation paper there is an enforcement procedure which is being proposed in order to make sure that this is basically both a success for employees and for the population and for the government alike, because it can have serious economic consequences in future. So basically, employers will be legally obliged to enroll eligible employees. They will be also obliged to deduct and remit contributions. They will not be allowed to encourage employees to opt out. Also, employers are forbidden from offering incentives or asking about opt-out intentions during recruitment. Employees must also not suffer negative consequences for raising concerns or enforcing their rights under the regime. Okay? And there are penalties which are being proposed for non-compliance as well, and they are expected to be included in the upcoming legislation. Now, implementation plan and consultation time. So way back in June, the proposed timelines were as follows. The public sector rollout is planned by end 2025, and for the private sector, the rollout is expected for 6 months after the public sector, which means around mid-2026. All right. Basically, government is to lead by example by auto-enrolling its workforce first. Okay. Now, in the last budget, the finance minister confirmed that we are in the final stages of this of the process before it being presented in Parliament for the legislation to go through. Basically, after the consultation period, there's a feedback report. The draft legislation is being drawn up, and MFSA are also developing supporting regulations, licensing processes, and oversight protocols. Now, this is a major, as I've been saying all along, this is a major structural reform aimed at improving retirement adequacy in Malta. The aim is to boost retirement saving, participation, and adequacy. And here, the government is aiming to balance increased coverage, okay, cost effectiveness. It's aiming also to limit employer burden and also to put in place consumer protection. So this is my last slide. And to conclude, so I have some summary points. So as I said, the goal is to boost retirement savings, saving participation and adequacy. Auto-enrollment will be under the Retirement Pensions Act. The eligibility criteria is for employees aged between 18 and 55 years of age, and for those employees whose employment is their primary income, okay? Contributions will be set at €50 per month. However, obviously, any employee can increase that amount. The government will be matching the first €100 for public sector employees, okay? There are safeguards, cost caps, pension portability, etc., etc. And we are expecting rollout sometime very soon. All right. So my last message to you is that this is coming. Some companies are being ahead of the game and have already introduced these schemes. Some have introduced them even 2, 3, 4 years ago. Others are introducing them this year or as of coming January. And I look forward to hear from my colleagues today, Dr. James Cicluna and Marif Sajla from WH Partners and Infrastructure Malta. So, James.
Turning my mic on. Hello.
Hello, James. Over to
Hi.
you.
Thank you for your presentation. I'm going to share my screen and kick off my little presentation. Thank you for inviting me to do this, by the way. I spent quite a lot of time together with our HR team and our CEO here at WH Partners, considering what employee needs, requirements are, and what is desirable. Now, in order to make sure that our employees have a healthy working environment. Now let's see from beginning. Tell me whether you can see the slide. Can you see the slide?
Yes, James, thank you.
Is this the right one? Do you see the full screen, or are you seeing the one with the notes?
No, we're not seeing the full screen. We're seeing your notes on the side.
Don't actually have notes on the side. Give me a second. Let me see how to do this.
However, it's quite clear, James. If you do not manage, it's fine.
Screen. Okay, I think we're gonna have to make do with this.
James, that's fine. That's
Okay.
good enough.
What is this text here? Is this something that you've just said? This seems to be recording and transcribing. Anyhow, let's get going. Okay. This pension scheme really, this just falls into one of the many things which we think is necessary for our colleagues, for our staff. Our philosophy here at WH Partners is that we don't see ourselves as offering people the opportunity to work a job. We want to offer them a career, and a career, to our mind, is a combination of offering them the opportunity to grow professionally, but also supporting them throughout their life, and that is a combination of things. That means making allowances for everything that life throws at us, which has to do with how we spend our time and where we spend our time, how we work. So we have some flexibility in working arrangements, making sure that people are remunerated properly for their job, with incentives which are financial, and making sure they're taking care, or encouraging them rather, not making sure, encouraging them to take care of themselves, because a healthy mind is also dependent on keeping healthy. So offering them things like gym membership, making sure they have medical insurance offered by the firm, and an office environment which is, I would say, more of a co-working community type feel. We have an active social committee. So this kind of fits into this ethos of ours. And by way of background, I was quite used to having a private pension scheme offered by my employer, because in my much younger days I worked in the UK for almost 10 years, and in the UK for almost 2 decades, if not slightly more. It's been obligatory for employers to offer a private pension scheme to their employees, and of course the employee can or cannot take it up at their option. So this was already offered to me when I worked there, part of the time I worked there, and I think it was a great way of allowing me to put some money aside in my much younger days. We introduced the occupational pension scheme here in April 2024, and I have to say thank you to APS, because APS was extremely engaging with us. We decided to pick APS because they really engaged very well, and they dealt with our queries and those of our employees, I must say, very efficiently, very promptly. So as far as we're concerned, this was quite a collaborative exercise with APS, and I would say seamless. They also have a very useful portal, and this is not an advert. I haven't been paid to do this. Okay, so this is really my genuine feedback, and well done to APS for being so helpful and supportive of our business in this regard. So again, I mentioned we want to reward employee loyalty. And I will explain later on. Somebody has their mic on, please mute it. The way we implemented it is geared towards rewarding employee loyalty. So apart from offering it, and apart from the clear financial and of course tax advantage, we also implemented it, as I will explain shortly, as a retention tool. Our experience with incentives which we offer to employees has been that these things really do enhance morale. They really help us stand out versus some of the competition out there. And I have to say it's something that we truly care about. I don't know if I mentioned earlier that we also offer incentives relating to loan repayments, and have deals for more advantageous interest rates for employees. We offer group packages relating to telecommunications and connectivity. So it's a whole bundle. We decided to implement the voluntary occupational pension scheme in this manner, as you can see on screen. So after somebody has been in employment with us for a year, we will match up to 50 euros a month. After the second year to 5 years, we'll match 100. Over the fifth year, we'll match 250. So the matching amount is capped to the maximum amount set for their years of service. My view is that the tax benefits under the scheme should increase much further, and I think that employees and employers should be able to benefit from credits or from refunds, as in the case of the employees, up to much higher amounts. I think this is a very interesting incentive to encourage people to save and to think ahead, which also happens to be the tagline of our firm, thinking ahead when it comes to their retirement. The scheme is actually, I think, quite easy to manage, and our HR team have absolutely no problem at all managing this. And the way it's done, really and truly, is quite simple. Any employee who opts in and decides to take this up, our team will inform APS, and then APS will liaise directly with the employee. We'll collect a consent form, and deductions are entered through our payroll system. At month end, we also have a monthly contribution data sheet sent to APS showing updates or changes on our side, and contributions, both employee and employer, are transferred to the bank by bank transfer before the end of the month. So overall, I know the uptake we've had is within range of what is happening on the market. So it's just under 60%. I would expect to see a bigger uptake as time goes by, and I would welcome a legislative, a legislative measure to make it mandatory for all employers to offer this to employees. What we have seen in the take-up is that for employees who are slightly older, the incentive is more a tax-driven one. So they literally think, oh well, I'm going to save a little bit of tax. Why not? For younger employees, it's more of a long-term thing. And what's really interesting is that there's an opportunity for employees to benefit from a moratorium. I can give you a couple of examples of people we've had who, because they're younger and because they're about starting off in their career, in their life, they want to buy property, for instance, and in the period of time when they've just acquired a property, they would be on a moratorium for a period of time because every penny counts, and they want to apply as much of their disposable income as possible to loan repayments or sometimes to saving for a deposit for a property. But then they're able to reactivate this after a moratorium, and I think that's very interesting. It's very realistic and practical. A closing thought from me is that as an employer, I think this should be looked at as another tool to show employees that we care, and adopting it and rolling it at a point in time before it's mandatory, I think indicates that. I think as employers, we have a duty of care towards our employees, and we should try and reflect that in creating a culture of care, showing loyalty. Loyalty works both ways, and mindfulness about the fact that if we want to offer a career and therefore a long-term prospect of professional growth, but that comes hand in hand, as I said in the beginning, with life itself, right? So with the journey of life. So looking at long-term growth and putting some money aside, and having a pot which you can benefit from later on in life privately, not relying on the public system, works very nicely hand in hand with that. If there are any questions, I'm happy to take them. Otherwise, thank you for listening.
Thank you, James. That was very, very interesting. Now there will be a presentation, a discussion with Marie Psaila from Infrastructure Malta. And after Marie's presentation, my colleague Mark Lamb will take over for a question and answer session, which will be held with both Marie and James. And also Mark will take questions from the audience as well. Over to you, Marie. I believe I need to share your presentation, which I will be doing.
Hi, good morning to all.
So, all right, over to you, Marie.
And good morning to everyone. And basically, thank you, Darren, for giving us this opportunity to share our experience with the implementation of our pension scheme at Infrastructure Malta. Before speaking about the pension, it is important to frame who we are as an organization. I don't think Infrastructure Malta actually needs much of an introduction, but basically we are if you can skip to the next slide.
Yep. All right, are you seeing it, Marie?
Not really, no.
Sorry about that. So let me share again. So
now, yes.
All right.
Yes, thank you so much. So basically, we are the national agency entrusted to develop maintenance and upgrading of roads and public infrastructure in the Maltese Islands. For us at IM, our people are the heart of everything we deliver the community. So with a large and diverse technical workforce, retaining talent is very, very important for us, especially due to large projects and for project continuity purposes, and also in terms of long-term planning. So this context is what drove our decision in introducing an occupational pension scheme, basically. It is important to highlight that the scheme was not imposed on us, even though we fall in the public sector. We chose to introduce it proactively as soon as the government gave direction in the budget speech back in 2024. We took this as an opportunity to lead an early adoption within the public sector and to set an example to other public sector entities, basically. I also want to highlight that IM does not have a tax incentive here because as an agency, we do not pay tax like private employers, but we still felt compelled to move forward with this decision and implement such a scheme to benefit our employees, basically. The process, all in all, took around 3 months. We saw what the market was offering. We felt that APS VOPS was the most flexible, and as James rightly said before me, it also gave additional benefits to our employees ahead of other service providers, basically. The transition process was very, very straightforward. The enrollment was done online, meaning that very little administrative efforts were required from our end. So it was very, very a smooth transition. If we move on to the next slide, we will see the key elements of our pension scheme summarized in one fact sheet, basically.
All right, are you seeing it, Mari?
Not yet.
Let me, for some reason. Are you seeing it now?
Yes, yes, yes.
Okay.
So, as I said, on the left-hand side, we have the eligibility criteria. IM is offering this scheme to all active employees on its books between the age of 18 and retirement age and to all grades. Now, this is something important and very important to us because we specifically chose to adopt a uniform employer contribution approach, meaning that every employee is benefiting equally regardless of their grade or salary. We also introduce a slight twist to our share of contribution by linking it to the employee's performance. I believe this is very interesting. IM has started matching contribution up to €50 monthly. However, from the second year onwards, the employer contributions are being adjusted on the individual performance rating and KPIs of the employees. This helped introduce a unified KPI system across our workforce, which was missing. It was a missing element in our collective agreement, actually. So, like this, all the employees are now governed with a KPI system. This also means that the scheme is not just a financial benefit, but it has now also become part of our reward strategy. Employees who perform well are being rewarded, and I think this helps us drive a higher performance culture across the agency. Overall, a few considerations from my end. It is a known fact that the majority of our workforce is not financial literate. It was also mentioned before by my colleague James. However, as we're very pleased to see an enrollment turnout of 30% of our workforce. We are very satisfied with the post-enrollment services being offered by APS. The employees basically have a live visibility through your portal of their investment performance, contribution are being deducted automatically through payroll, and literally this has had no effect on our operational day-to-day running of the agency, basically. So no very minimal efforts when to benefit from this scheme. That's the end of my presentation. I don't know if there are any questions.
Thank you, Mari. All right. Now, if the audience has any questions, we will also hold some time for questions after the question and answer session between Mark, James, and Marie. So basically, I'm going to give over to Mark.
Need to unmute your
Hi.
microphone.
Yes. Hi. Sorry about that. Hi, I'm Mark. I form part of the pensions team with Down. And like you, I've been sitting in on the conversation today, and it's been very interesting. And James and Marie, I've met, and I know that they take a great interest in their employees. But I do have some questions. Just to kick off the discussion, really, and as Darren said, maybe we can open this up to the audience after this part. But Marie, if I can start with you, please. Do you believe that employees are interested in benefits such as pensions, and do you believe attitudes have actually changed over recent years? What are your thoughts?
Hi, Mark. Yes,
Hi.
basically, I think the interest in this type of benefit is definitely growing, but it's still an emerging topic for many people. Unfortunately, the aspect of financial long-term planning is improving, yet I still believe that there remains a noticeable gap, especially in the younger workforce, as James mentioned earlier. I mean, younger individuals might not understand the value of starting to save early. But yes, as I mentioned earlier, from my experience at IM, I was genuinely surprised by the level of engagement we have. We saw a take-up of over 30% across the workforce in a very short period of time. And for a newly introduced benefit and for a subject that is not naturally at the top of people's priority, I must admit, the level of adoption was very encouraging. So yes, I do believe employees are starting to recognize that investing to their pension is important for a better life.
Very good, very interesting. And keeping on that same theme, Marie, because you come from a slightly different area than most of our audience today, from maybe the government
Yes, we
sector,
do.
let's say. And it was announced, as Darren said, that the government would be matching contributions and taking a lead there. But obviously, there's no such pressure on private enterprises to do that. Even when the law comes in, employers won't have to actually have to contribute. But do you think that maybe by the government making this announcement that they're doing these things for their workers, it will in turn place pressure on the private sector as well? What are your thoughts?
I think it was a very important development for Malta, and that was needed to drive the change across the board. While it may create some pressure actually on the private sector, the impact will largely depend on the size of the organization. I would understand that for larger organization, matching contribution could potentially become part of a broader employer branding, let's say, or a retention strategy similar to what we adopted. However, for smaller businesses, matching the contribution on the same level as the government may not be financially feasible. So not really. I do not expect a uniform reaction across the entire private sector. That said, I do believe that the government, this move, contributed to a cultural shift. We are now speaking more about pension schemes in general. It won't necessarily force the private sector to follow suit, but it will definitely push employers to rethink the topic, basically.
Very interesting, and thanks for sharing that with us. I think that's quite interesting to see maybe the slight differences between the public private sector, but we're all trying to achieve the same things at the end of the day. A question for James. A question for James now, if I may. May I ask James, how did you communicate the benefits of the scheme to the employers, and what were the messages that worked best? I know you touched upon this, but were there any key messages that you found worked well?
I think To be honest, I think you helped us a great deal. By you, I mean APS. So it was very helpful to have you come in and explain the scheme and how it would be administered. Our people and culture team here, really have the pulse of our staff, and we had some sessions as well to announce this. And also bear in mind, we're a professional services organization, right? So we're a law firm, and we're pushing 100 people. So by and large, say most of our staff, we're somewhat familiar with this notion, right? With this private pension scheme notion. Even more so our tax team, which is one of our larger teams here. So I don't think we found it particularly challenging to explain it to employees. The idea of a matched contribution and a related tax benefit is something which resonated very much. I have to say that I expected the uptake to be higher. You might say, close to 60% is actually very good. But I just wonder why, it's not closer to 90, because we're not talking, for most of the people who work in the sort of professional service firm like ours, this level of contribution is not life-changing, right? And it's especially for the younger members of staff. And I'd say average age at our firm is probably sort of mid to late 30s. So I'd have expected a slightly higher uptake. I really hope to see this being introduced as an obligation on all employers, right? So offering this as a legal obligation, and I think it very much helps, as Marie was saying, people start to think more long term. I think it's important to work with the younger people also on induction into an organization, explaining what this benefit is and why perhaps they should consider taking it up. So I think it's incumbent on an organization actually to introduce this notion of private pension and then lifelong saving as something that they explain to their fresh intakes of young employees, especially.
Very interesting. Thanks for sharing your experience on that. Just on the point of administration, because I'm guessing very many members of the audience, I mean, their time is stretched, and it would be natural to see when the law comes in, which we're expecting soon. The government paper said by the end of this year. Maybe there'd be some slippage on that for the obligation to introduce this thing. But I'm sure many people are concerned about the administration side of it, and I know that you touched upon it and Marie touched upon that side. But your message to the people listening today who have a genuine concern about, is this going to take up hours of their time every month, another burden to deal with each month? What may I ask what your thoughts are on that?
That's a really good question. So I'm the firm's managing partner, and I can tell you that other than being involved in the decision to implement this and explain this to employees, I've only been involved insofar as touching base with our people and culture to see what take-up is, and also to try and understand whether they're dedicating much time to administering this, right? So all of the feedback I have indicates to me that the additional effort required to administer this is really non-material in the greater scheme of things. So I don't have any feedback which suggests to me that this has become a burden. So all of the feedback I have is actually this is really easy to administer, and it doesn't require much time at all.
Very good. Marie, may I ask you a question now on this? And really, it's about any misconceptions or resistance that you met from any of your employees, be it, any genuine concerns or fears that they may have had with that? What was your experience on that side of things?
I mean, not really on the basis that, remember, this is being introduced on a voluntary basis. So employees who fear change or were not simply interested in the scheme could have opted out, basically. So no. However, the process was surprisingly smooth. As you were aware, you were with us through the whole process. We started by inviting all employees to an informative session delivered by your good self. The session covered the full life cycle of the scheme, from enrollment to ongoing contribution, investment returns, and we also discussed scenarios of what would happen if an employee changed employment, for example. So this helped a lot in addressing questions up front to the employees. After the session, we had also issued the pension scheme fact sheet, which summarized everything in simpler terms. Overall, I believe the whole scheme was very successful on the terms because we were transparent, we had an open communication, we allowed the employees to ask questions directly to the experts. And yes, I think this approach eliminated misconception before it can even develop. But I think there is a difference that we need to take into account because at this stage, it was still voluntary. So I mean, you can ask me this question in a year's time or to other employees, to the other employers who might need to implement it on a, how do you say it, on a...
There'd be, there's an obligation on them,
An
isn't there?
obligation, yes, and that would be, might be different. So this reply, obviously, is coming from my experience at Infrastructure Malta.
Very, very good. And James, just one last question for you, if I may, and then we'll maybe open this up to the audience. But if you had any advice for any company seeking to set up this scheme, I mean, okay, this thing is becoming, there's going to be becoming the law is going to become an obligation. But I think the point that you made today, you and Marie made today, you embraced it and saw it as an opportunity. But what if any advice would you have for companies seeking to set up staff pension things? What are some basic things that they should consider?
I think they should utilize this as a bit of a retention tool, as we did, and they should try and use it to help them stand out versus their competition. So of course, this is in the private sector that I'm talking about. I think it shouldn't just be looked at as as an obligation that's coming people's way. There can be very clear advantage, right, for an employer positioning themselves as somebody who genuinely cares and showing employees that loyalty is rewarded. Of course, this would be just one of the tools in an employer's portfolio or a weapon in their arsenal to show that they appreciate loyalty and that loyalty works both ways. So I think it should be embraced as an opportunity, really.
Very good. Thank you again to James and Marie for your insights, your valuable insights based on your own experiences, which is much better than listening from someone from APS. So you've lived it. So maybe we'll open this up just to see if there's any questions out there. Any questions for James or Marie or myself or Darren. I'm just going to go to the chat, or if there's a hand up, I think from Ruben. You have a question, Ruben?
Yeah. Hi, good morning. It's Ruben from Media Co-op. Actually, two questions. So a question that I had from one of the employees was, what happens to the money that is put into this account if they decide to move abroad forever? And the second question is, will any existing voluntary pension schemes set up by employers so far be affected by the reenactment of the new law? And if so, would the transition to the new system be seamless? Thank you.
Okay, look. Okay, I'll try to answer that, but very good and important questions, and these are the kind of questions that I'm sure you'll be asked. As far as the investments are concerned, actually, obviously, we can speak from APS's point of view, and it's not an advert for APS today, but we can speak about our experiences here, and other companies offer different ranges as well. But for example, with our scheme, what we actually do, we speak to the employees, and it's the employee's choice of the level of risk that they want to take on their money. So, for example, we have a very secure cash option, so there's no market participation whatsoever. So if they're looking for more securities without the ups and downs of the investment markets, we have that as an option, and we have a cautious, balanced, and a growth option as well. So, but the key message is that we as a provider, and other providers will offer similar kinds of opportunities, I'm sure, but we will ask the employees the level of risk that they are willing to take. So it's down to them, and they will select that. That means the burden is taken off your shoulders, because you as an employer are not making this important decision for them. They can choose the relevant scheme, and they can switch at any time without cost or any charge, from low to high, high to low, whatever. So a range of options. And actually, what we've actually found is in real life experience, sometimes this is the first time that many employees have actually invested in anything. So it's natural for them to be cautious about this, and inquisitive, let's say. But once they start to see where their money's going, they've got access to an online pension portal, it's amazing. They become more interested in it and more engaged in this process. That's speaking from our experience. You speak about the portability, and especially you mentioned maybe transfers abroad as well. Now, just to answer this very quickly, because it is a very relevant point, especially with the percentage, or the high percentage of non-Maltese, non-EU workers that we have in Malta at the moment. So this is a real consideration. And as you know, the world is a big place, and there's many different types of pension schemes, and so we can't break down everyone in the world, because that would take us all day. But in essence, if we've handled many transfers to and within Europe, and that's very straightforward. The rules are very similar, whatever. It depends on then the third country nationals where they come from. Sometimes, because of the legislation, not our own scheme rules, it's a bit more restrictive on making transfers out. If it's outside of the European Union or outside the EEA, it's a bit more restrictive. Worst case scenario is that the money stays invested, it stays here in Malta, and the employees have access to this from the age of 61, wherever they are in the world. But it's a very important point, and certainly your workforce that maybe are non-EU will ask these kind of questions, and we're here to help you support them. I hope that's answered your question.
Thank you.
Any questions? Any other questions? Yes, there are some questions. I will share them. Please. So from Rain Polacco. So she's asking, for TCNs, is it the first 6 months employed in Malta or employed with the particular employer? If employed in Malta, how will it work vis-a-vis probation period if changing employers?
Okay, so basically, for third country nationals, in order for them to be eligible for this, for the auto-enrollment, okay, they will be automatically enrolled either after 6 months of employment or after probation, okay? So they would need to be past their probation period, basically. Now, what was the second question? Can you repeat the second question?
If employed. No, but what you answered kind of the question, because you're saying 6 months with the employer, not 6 months in Malta. Okay. So it's fine. Exactly. So Christian is asking, just a second, at retirement age, is the pension paid as a lump sum or in regular installments?
Okay.
Yeah, that's another very good good question. The legislation states that to be a licensed scheme, to have all the tax advantages applicable to these license schemes at retirement age, which can be anywhere between the age of 61 and 70. You don't need to specify your actual retirement age in advance, but it needs to fit within that within your 60s effectively, and then you would decide when you take the benefits at that particular time. However, the legislation is clear, and it says that there must be there's a choice of either a lump sum payment up to 30% of the accumulated value, so up to 30%. You can choose to take that or not choose to take it, but up to 30% can be taken as a tax-free lump sum. The remainder, i.e. 70%, has to be accessed via regular withdrawals. Now, these regular withdrawals can be monthly, annually. So this is kind of like a drawdown scenario. So you don't have to take the lump sum. You can have it all as an income drawdown and take it as a monthly or annual income. But to be fair, in our experience, most people will take the 30% lump sum on the day they retire and then draw an income from the remaining 70%.
So another question, does having an occupational pension affect a person's private pension plan in any way?
All right, very good question as well. And here is where the tax incentives come in and become attractive. So basically, in Malta, we have a three-pillar system. The first pillar is the government pension. The second pillar are the occupational pension schemes, which we are discussing today. And the third pillar are these personal pension plans, all right, which Trizian is referring to. So basically, let's say I have a personal pension plan, all right? And my employer introduces an occupational pension scheme. The first advantage is a fiscal one, is from a tax perspective, where all of a sudden, the maximum tax rebate I can claim, okay, doubles up, because with every good thing there is a capping, all right? And as probably many of you know, currently the maximum tax rebate on a personal pension plan is 25% of €3,000 contributions per year. That is the maximum. So let's say I can afford to contribute 5,000, for example. By my employer opening up an occupational pension scheme, I can route 3,000 into my personal pension plan and route the other 2,000 in the occupational pension plan. And in that way, I am kind of increasing the maximum tax rebate. Now, whether it actually affects it in any way, not really, no. So you can have both running at the same time. You can transfer from one to the other and do it whenever you want. So these are very portable.
Whoever has the mic on, please switch, mute yourself.
If you have the type A, like hold down,
Another question on the 6 months, I think you. I'm not sure
Yes,
if you
is
answered
the
it.
6 months timeline and eligibility for auto-enrollment only for TCNs or for everyone?
So basically, everyone needs to be past probation stage. All right, that is the rule of thumb.
Exactly, yes.
Just to be clear, will you
So-
also have 25% tax rebate also? Yes. So yes, thank you for this question. So the tax rebate is available both on the occupational pension scheme and the personal pension scheme, and the maximum tax rebate is the same on both. It's 25% on 3,000 contributions per year for the occupational pension scheme, and the same for the personal pension scheme. Very good question. If a person passes away, is the money lost or passed on to the heirs? This is a very, very good question. And that question, it's one of the frequently asked questions, basically. So, both at accumulation stage and at drawdown stage, the pot is inherited, okay? At accumulation stage, if the person passes away, the heirs are paid as a tax-free cash lump sum, all right? Upon retirement, based upon the way one is withdrawing the pensions, his pension pot can make a difference, because there are two ways how one can withdraw his pension scheme. It's either through basically the default way, which are programmed withdrawals, or annuities. Programmed withdrawals, which is the default route, the pension pot is inherited. An annuity is a guaranteed income for life. We will not delve too much into it today, but it is basically a financial product that one can purchase in retirement, and the terms are determined when this is purchased.
And just to share a quick story there, because it is a very relevant question, isn't it? We're asked this a lot about this, because basically, in essence, yes, the money's paid out as a tax-free lump sum. That's any remaining money's in the pot. But we had one claim recently, a very, very unfortunate situation where there was a relatively young gentleman died. It was a tragic accident, and we were dealing with his wife, who just so happened to be an APS bank customer as well. But her husband had actually nominated her as a beneficiary on the pension, because under the pension scheme, because ours is set up under a trust arrangement, which we won't bore you with all the details of that today, but effectively it's very easy to set up nominated beneficiaries. And the beauty of that, or the benefits of that, is it doesn't, that if you nominate a beneficiary and the worst were to happen, the proceeds don't have to go through wills and probates and notaries and whatever. So in this particular instance, because her husband had nominated her as his nominated beneficiary, his sole nominated beneficiary, within 10 days, we'd actually paid out the complete value of the pension over to her. I must say that because we were dealing also on the other side, where there was joint accounts involved, bank accounts involved on that side, and that took a very, very long time. That part had to go through the notary. They had to check all the law framework, which I'm sure a lot of you have been through this thing, and this was taking months and months to get that payout. So this pension, by nominating beneficiaries, it was paid out very, very quickly. Actually helped her live through these very difficult financial times. So that just came to mind. So thanks for allowing me to share that with you. Down on the 3,000, there was a question.
This is another interesting question. If an employee contributes 3,000 a year and the employer matches an additional 3,000, do both benefit from the 25% tax credit? The simple answer is yes. So the rule of thumb here is whoever contributes is eligible for the tax rebate, and the capping is the same for employers. So let's say I'm an employer and I employ 100 people. My capping is €3,000 contributions per employee. That would give me a maximum of a €750 tax rebate on every employee. Next question over to you, Mike.
Let me see. How does the tax rebate work? Is it refunded as credits at stage of issuing this tax statement for the year, or is it tax incentive somehow going to be administered? Very good point. Let me answer that, because there's two angles to this on the tax rebate. As Darren just mentioned from the previous question, there's a tax credit available for the employee and the employer. And how they get the tax credit is actually a little bit different. Let's start from the employee's point of view. I'll come on to the employer in just one moment. But let's start from your worker, your staff member, your employee, how they get their tax rebate. As Darren has quite rightly mentioned, they'll be invited to join your scheme. They have the option of contributing into their scheme. So if they contribute into the scheme, whatever they contribute in that tax year is eligible for a 25% tax credit. So for argument's sake, let's say they put in 83 euros per month, which is around 1,000 per year. Then they are due a tax credit back for 25% of that, which is 250 euros. It's paid in the following tax year. However, the good thing about this from the employee's point of view, they need to do nothing. They don't need to claim it. They don't have to fill in tax forms to get the tax credit. They just wait for the check to turn up. There's been a series of checks recently sent out from the government. Probably you've received them as I received mine, but that's not the tax pension check, but it's along the similar lines. So for the tax credit check, your employee would sit back and wait, and normally it's paid around this time of the year, October, November of the tax year, based on what they contributed to the previous year. Let's now look at the employer, because that's a bit different. Because what actually happens there is when the employer is completing their tax return for the year, there's a question on the tax return, the company tax return now, and it says, do you contribute to a voluntary occupational pension scheme for the benefit of your employees? You would tick or your representative would tick the box yes, and you would put the amount that you've paid in that tax year in that box. Then what would actually happen? A calculation is made. So if there's any tax due from your company, then that proportion, that 25% of that eligible contribution, would be offset immediately against tax. So it's going to lower your tax down. It's not classed as a benefit in kind. You as a company, you as your employee, are not going to be paying any taxes because you offer this kind of benefit. So you can show it on your tax return as an immediate benefit there. And also, if your organization doesn't pay tax in that particular year, you can actually, as a business, as the employer, you can carry this forward for future years and use it as a future tax credit. Now, that isn't available for employees. You can't carry forward unused benefit as an employee, but you can as an employer. I've given a long-winded response to that, but I hope that answers your questions.
Right, I can see a question. If an employee joining the company would have already an occupational pension scheme from his previous employer, but through a different provider, would this be transferred to the provider being affiliated with their new employer or start a new plan? So basically, the legislation makes it very easy for pension pots to be transferable. But these schemes are also very flexible. So you can also hold different pots with different providers and from past employers. Obviously, the pot from your past employer will remain idle and invested. But for those wishing to have just one pot or everything under one provider, that is possible as well. So basically, the simple answer to this is that, yes, this can be done in any form or way in reality.
There was a question that an audience member picked up on, and just to be clear on this beneficiary, and they went in about if there's minors available, children involved with this, and again another relevant point with that. With our scheme, for example, I will talk about our experience with that. Our scheme is set up under a trust arrangement. We have a board of trustees that supervise our plan. They have to make sure that the interests of the members are always safeguarded. Where should a member of the scheme pass away, and for example, there's children involved, they've nominated their children as beneficiaries, what would usually happen then is that the trustees, obviously they would have to look at the situation, but if it's clear that there's children involved, what they would look to do is they would look to look after this money under trust effectively until the children reach the age of 18, and then they would look to pass over the money at that particular time. Now, obviously, this can become a complicated area. Probably James knows more about this area than me. If there's other arrangements in place, or if there's other considerations, because there's other letters of wishes involved, of what would actually happen to someone if there's children. I mean, it can get complicated, but on its purest form, we would look to look after the money until they reach the age of 18.
I can see more questions on the topic of tax rebate to employee. Since it takes almost 1 year to get the refund check, what happens if the employee leaves Malta by the time the check arrives? All right, so there is a way on the IRD portal where you log on with your EID, where you can route tax rebates into a bank account. So basically, that's one of the things one can do, which is probably the easiest.
And to be fair, I mean, even if they're abroad, the tax they would have paid last year, and they're still due still due that because they were living in Malta last year. So the tax credit is payable from last year. But that's a good point about the bank account. Yes. Okay, let me just let's read that last question. If a public sector employee is already enrolled privately, let's say the max for tax rebates are either 250 times 12, 3,000, quite right. Do she qualify for this initiative? That the employee, in this case, the government, will start paying the same amount. Yeah, I mean, well, absolutely. So as Darren quite rightly said, there's two pillars here. There's the second pillar, occupational scheme, and there's the third pillar, personal pension. In an ideal world, what we would all do, if we could afford it, we would put in 250 into the third pillar personal pension, as you mentioned this person is doing, to get the full benefit on that. And in addition to that, they join their occupational scheme, and they pay into that, and they will get a tax credit on that part as well. Now, for the public sector employee, there's an added benefit, because the minister has announced that they will be matching contributions for public sector employees up to €100. So should the public sector employees join their occupational scheme, their workplace scheme, they can keep their personal pension. That's fine. They will get the additional tax credit on the amount that they pay into that themselves, and they will get a matching contribution from the government of €100 as well. So all good news.
Can we take the last question, please?
Yeah, last question. Let me. I'll take that one if I may, Karen. Sure. No problem. This is. I think this is a very fair question, because the question is, if an employee falls into the lower tax band and their employee is not taxable, are they still eligible for a tax rebate? So this is. I think a good question, because the government call these things tax credits for a reason. Actually, they don't call it a rebate, they call it for credit. And so it's a credit on tax that you have paid. So whatever your tax bracket is, if you've paid sufficient tax in that particular year, then you are eligible for your pension tax credit to be paid. So if you paid in €1,000 into your personal pension or your second pillar occupational scheme, if you pay in 1,000, you are due a tax credit of 25%. So that's €250. So as long as you have paid €250 in that particular tax year, then you will be eligible for the tax credit. However, let me give you another example as well, because what about if you don't earn any money? Can you still get a tax tax credit, because based on what I've just said, it would appear that you can't. However, there is a provision under the legislation that if you are, for example, a spouse, and your spouse is paying tax and they are working, even if you are not paying tax, I say you, it could be your members of staff, it could be their partners, for example, their spouses. But the rule is this, that a spouse can actually claim the tax credit back on a pension in their name, even if they're not paying tax. And what they would then do, they would actually, and we would help them, they would actually specify their spouse's tax credit number, their ID number usually, and therefore they become eligible for the tax credit based on the tax paid on their spouse, on the proviso that their spouse is actually paying enough tax to cover their contributions and the tax credits which are reclaimable on the contributions that member is paying. Again, a bit complicated, I know, but for sure it's a tax credit, and even if you're a non-taxpayer but you have a spouse that is paying tax, it's still possible to claim tax back on tax that you haven't physically paid yourself. Okay, Karen, I think that was the last question.
That was the last one, yes. Thank you so much. Thank you, everyone. Thank you to APS, to WH Partners, and to Infrastructure Malta. We will be sending the presentations, all presentations to you later on today or first thing tomorrow morning. Thank you so much.
Thank you. Bye-bye.
Thank you.
Thank you very much.
Thank you.
Yeah.
Thank you.
Thank you.